I'm so happy to be creating the 2.0 course of the Swag Academy to, just inform you guys on how to accurately trade the market and give you guys a foundation to trade. Right now in this video, I'm going to talk about strictly stop loss purposes and where to place them every single time. I'm not going to get too much into entries in this video or anything of this nature. We're just specifically talking about stop losses for your risk management profile. So with your risk management, in another video I'll talk about what it should be, obviously 1 to 3, 1 to 4, and why that plays a big part. But we're going to talk about strictly structure and price action. So let me just remove the moving averages just for a second. Just get a clear chart of just actual candlesticks. So obviously anybody can see this is going up. So if you don't know the stop losses by now, which you should already, a stop loss basically protects you from losing too much money at any given point in time. Meaning, if you're at the gym, if you are, on your phone, but like you're on social media, or you're talking to like a spouse or something, and you're not really paying attention to the market, it really helps you, filter out losing too much money. Like if you don't want to lose more than $100 or more than $500, but a stop loss you won't ever. There may be that 1% chance where the news is going crazy and like you may experience slippage and like a late exit and all that stuff, and it's like, or even you may experience a situation where price may get you out and on the chart it doesn't look like it hit your stop loss, but it did. Obviously the market was going too fast and it couldn't accurately, show it on the chart. That's, once in a blue moon when there's too much volatility, like, Brexit and all the crazy, news announcements that come out. But right now with stop losses and, the majority of the time, it's this. So let's say, for instance, if you were to get in like somewhere within these candlesticks because you see the consolidation, you can clearly see clear as day. Like I said, I'm not even gonna focus on entries. But let's just say you see this here. We have this trend line. We have, this support right here where 1, 2, 3, you have, this is where the top part is. So you can see consolidation is here, right? Price breaks out of consolidation, closure above, confirmation, you get in right here, right? Your stop loss has to be every single time right here, right below this line, but a few pips below. Why is that? It's because this will be considered essentially a break of structure. So if price is making higher highs and higher lows, which you already know, it won't come back down and break structure, create a new lower low, and then go back up. Then it'll just create a lower low, will come down, and it'll start creating more lower lows and lower highs, and it'll be a downtrend. So you always want to put it structure-wise a few pips below the last lower low, in a higher low, in an uptrend. So if while price is going up, it comes down, it goes up, it comes down, it never stops you out. Now, here is where you put your stop loss into actual break even or even profit. Now, we entered right here. Let me just make this green too so people can obviously see it better. All right, cool. This is our entry. This is our stop loss. I'm gonna make that red. Right, cool. So we would need anywhere below this green number or green line would be considered negative. Draw down, negative, 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 stopped out. So when price is going up and coming down and creating, a higher low, up, higher low, higher high, higher low, higher high, higher. The more it does that, that is when you can accurately move your stop loss into break even. You take this, and mind you, this is break even, so actually into profit. You take this, you move this way up here because this is now the last higher low, and you won't notice until it's done. Once you see like a retracement and price starts going up again, feel free to move your stop loss into actual profit. So at the end of the day, if price does this where it goes up and then something happens and it comes all the way back down, guess what? It stopped you out, but you didn't lose any money. You probably made, depending on your lot size, $100, a few $100, $1,000, a few $1,000, depending on your lot size. Now, the more it makes higher lows and higher highs, you just keep moving it. I'm sorry. Back up some. Let's grab it. You just keep moving it to over here. Boom. Now that's your, your new stop loss. It goes up. Boom. Higher low. This is your new stop loss. You can say here. Here's your new real stop loss. Boom. Go up again. New stop loss. New stop loss. And you can see Now you're so much into profit that if this trade decides to come crashing down, this was 125,750, right? So this was 1.25750. Boom. And this right here is 129, I would just say 200. 1.29200. Off the top of my head, that is 450. That is 345 pips. You are in profit. 345 pips. So if it takes you out, you were 345 pips in profit. And obviously, if you multiply that by your lot size, that's how much money you would have made. That is a lot of money. A lot of money. So you want to be mindful. You want to be very, very, very mindful of what you're doing, because if you had a 1.00 lot size, you just made $3,450. If you had a 2 lot size, you made around $6,800 or $6,900. Obviously the original profit times 2, and it goes up and up and up. Or if you had a lesser of a lot size, you would have made less money. It goes just like that. But that is what you call a risk-free trade, where you don't got to worry about it no more. And this is where you keep your risk management always on point, because when price is below, all right, now you got to make sure, obviously you may be able to lose this trade. It can go negative. It may take some money out of your account. Once you start seeing structure being made, move your stop loss into either break even if the structure was on break even. This was not, it was a little bit above. So move it right below this, and guess what? Now you're in a risk-free trade. Risk-free means there's no chance you will lose any type of money. It may stop you out, but if it stops you out, it stops you out in profit. It doesn't matter if it's $100 in profit. It stopped you out in profit. And you want to get in the habit of creating that habit, because that is what all the good traders do, where it's like we try to be as risk-free as possible. We are not avert to risk. Like, we definitely take risk, which is why we're even in this market. But at the same time, we want to minimize our risk, which is what all investors and day traders do. When you're actually in the market, you're actually in trades, you want to see, how can I obviously make the most money while executing and minimizing all the risk possible. And this is the way to do so, where that 1 to 4, 1 to 3, 1 to 5 risk to reward ratio, the one played a factor, because at the end of the day, you still made some money. Now, the goal is to obviously move your stop loss a few pips below the last low. So if price comes to retest this same level, remember, you don't want to put it on it or a little bit, or like close to below, because price can easily, if price wanted to, price could easily come right back here and then come up, because it never closed below this level. Just like I said over here, if it came down, closed below, it wouldn't close below and then head up. It just started making lower highs and lower lows. So you got to be mindful. You don't want to place it right on it, because price can easily retest this level as support, just like it did over here. 1, 2, 3, and then push up if it wants to. You want to place it a few pips below, so you know that if price were to come down, so already, if price were literally to come down and close and hit this level and stop you out, chances are it's making a lower high and a lower low. So I hope this video helped you guys, but understand with the risk management, the goal is not to place a trade. Like I say this all the time, if you are 30, 40, 50, 60, 70, 80, whatever pips in profit, and you end up losing that trade or losing money, that is your fault. You always want to make sure you at least take partial profit, or at least place your stop loss in profit, so you minimize the risk, and it's a risk-free trade. So feel free, if your stop loss is here, and then it's here, and then it's here, but you see it still going up, but like from here, the break even or the enter point, all the way up here, you're up, let's say $1,000 or $1,500. Take half of that out and let the other $750 run. Or if you're up $3,000, take $2,000 out, let the $1,000 run. If you're up $500, take $250 out, let $250. You know what I mean? Like just be mindful. Always make sure if you're in profit, and I don't mean like quickly in profit. Like I said before, it depends on your lot size. If you're using a 1.00 lot size, making $100 means nothing to me, because that's just 10 pips. But if you're using a 0.10 lot size and you made $100, that means you're about 100 pips in profit. You know what I mean? So it depends on your lot size, but the goal is obviously, while you're significantly, amount and a good amount in profit, to make sure you at least make it a risk-free trade by putting your stop loss into at least break even or in profit. but also taking some of that money and putting it into your bank account, aka your trading account, before you obviously transfer it over, so you can obviously use the market for what you're here for. You're here to make money. You know what I mean? You're not here to see floating profit and see you making money on MetaTrader 4 and screenshot it and put it on Instagram, but never close it or close half of it. Or you put on Instagram you were up 2,000 and you were up 2,000, and then an hour later you're only up $500, and you never updated your Instagram to show that you only closed $500 because you didn't have the wit and the expert knowledge to at least close half of that into your account, or even the full thing, and just call it a day because you reached your goal for the day. Like, all profit is good profit. So I hope this video helped you guys, and I will see you guys in the next video.